Have you wondered what goes into a business valuation and whether you should trust it or not? Then this video is for you. I'm going to do a quick kind of run through of different types of business valuations, what I've seen, and kind of what's going on right now with a couple clients that I've had now and in the past when I think about business valuation. So if that is something you're interested in, then stick around and find out more. I am Natalie Cook, owner of Finance Fight Club, and I really enjoy talking about finance because I find it very fun, as my shirt will also tell you. I was thinking about this a lot today and this week because valuations have come up multiple times in my emails just this week. And then over in the course of my life as a CFO, it comes up pretty regularly. What's my business worth? What is this worth? And there's lots of different uses for valuations. There's lots of different needs for a business valuation. And then there's just a lot of misunderstanding about what goes into a business valuation. So I wanted to break it down. I'm going to be pretty brief with this one just because it's nuanced and it's hard, and it probably is better suited for a blog because you might need some breakdown. So the first one I want to talk about is just like estate planning is a pretty common use for business valuations. So if I'm going to put my business into a trust and it's going to pass down to my kids, now I'm not an estate lawyer, so there's probably some nuance I'm missing. Haven't gone through this myself, but have had a couple clients go through it. You're going to just want a quick business valuation in order to value that estate for what it's worth. That's really simple. That's it. Not a big deal. You just need a point in time valuation. Now, that does play into taxes. I'm not going to get into taxes in this one. We're just going to skip that. We'll do it in another video, likely with a tax expert or after I've talked to a tax expert and then claimed all their knowledge as mine. Just kidding. But that does matter. So that basis of what you are putting in your estate matters quite a bit. So you do need to pay attention. But at some point, that valuation is just a point in time. You need that number to calculate something. That's one part of it. The other use of a business valuation is transferring ownership. And this one is more complicated and nuanced. Sometimes it's the same valuation, doesn't matter, same method. But it might be there's two business partners that are transferring ownership and they need to come to an agreement on what that equity is worth. Then it gets a little more complicated. So it could be that they agree they need a valuation, they're getting that done. Then they agree on that the business is worth $1 million. They each own 50% of that. Okay, great. Everybody's happy. That is wonderful. That's another type of valuation. Similar to estate use, same thing. Valuing that pieces of equity. And that might be used for estate planning. It might just be used for buying somebody out of the business. Selling a business is also another use for business valuation. Now, this one is where it starts to get a little bit more complicated because the valuation of your business is, if you are going to sell, is the value that your buyer is willing to pay for it. So they may not agree with the way that you've done your valuation. Now, I probably should have started with what goes into a business valuation and how are they calculated and all of those things. I'm going to just kind of breeze past a little bit of that to kind of explain this business valuation is that there's so many methods of valuing a business. And you use different methods kind of based on what you want to do or what in-depth study you want and what type of business it is. So there are SDE calculations, so that's seller discretionary earning multiples. So if I can take $300,000 of cash out of my business and my business trades at 2 times SDE, then it's worth $600,000. That's basically the math on it. What's that SDE? What's the multiple? How many times do I multiply it? There's also EBITDA multipliers, earnings before taxes, depreciation, amortization, and interest. Forgot that one. And that one is also, sometimes those are market rates. There's like a lot of data around how they're trading. But I also find, it's a little bit of a sidetrack, is that one just gets thrown around a lot. It's like, what's your EBITDA multiple? It's 20 times, it's 15 times, it's 4 times. I guarantee you that you've been told 5 different multiples and they're all probably slightly wrong because everyone's trying to negotiate a point off of that. And so I would take all of that with a lot of grain of salt. Unless you've had a formal valuation done, that EBITDA multiplier that people throw out, kind of meaningless. And then you can do discounted cash flows. You can do market rate, what businesses comparables. That's what the word I was looking for. All of those things kind of give you a number, but there's still a range, right? There's still this range of like, it could be $500,000 or $2 million, depending on how you calculate it. I did a valuation last year and it was like 700,000 to 6 million, depending on which way you do this valuation. And so I think that can be so confusing as a business owner, is like, what is my value? What is my walk away price? What is this? It is the value that somebody is willing to purchase your business for. And so that is why it is very hard to value a business. It is not straightforward. It gets very confusing. It's something that people argue over. So let's talk about another scenario in which you would want a business valuation. I talked about partnerships. When you are disagreeing with your business partner, you sometimes will require a valuation, and both sides will pay for that valuation. So if you are about to disagree with your business partner over the worth of your business, be prepared that each of you are going to pay between $3,000 and $10,000 for business valuations, and then compare them. And I've been on one side of those where I've looked at them and I said, I don't agree or disagree, or how does this work? It's really hard because everyone is interpreting a large amount of data very differently. And there's so many assumptions that go into those models that it can vary widely, and they can all be kind of correct. So I think my point there is business valuations are very fluffy. They don't feel very concrete, and that can cause a lot of stress when reading a valuation and trying to understand it. My best advice when you are trying to enter into a valuation or figure out that valuation is to know what the goal is. Don't get a business valuation just for funsies. Likely don't do a free valuation with a business broker unless you really trust that broker, because sometimes they're using just software and they're giving you a multiple, and it could be very different than what their sale price could be. If you aren't going to use that valuation for anything, you can do back of the napkin math to get to a close enough number. The last thing I'm going to say is that it's just very uncomfortable to get your business valued. Oftentimes, the owner's perception of value is not what the outside world is going to look at. So when a business is valued, it is in the United States, it can differ in different countries. It's valued very much off of the tax returns and the financial statements. And in those tax returns and financial statements, there also might be assets. So if you own property or physical equipment, that can impact your valuation. Without that data, without clean data, you can't get a clear valuation. And even if you do get a valuation, it's not going to take in your sweat equity. You can't say, well, I put billions of dollars into this company. Why is it only worth $100,000? It's an extreme example. Business valuation doesn't matter. It's an emotionless analysis of your business, and it can be challenging to go through that. On the flip side, if you are going to value your company, if you're going to sell your company, you want to get a business valuation so you can be settled in reality before you go out into the market. And I would suggest getting that through a valuation expert prior to going to an M&A firm, or the M&A firm might do it for you. All of these things are worthwhile and great to do if you have a goal in mind. If you don't have a goal in mind, it's a lot of money to spend. So just be warned that you can do some of this on your own. Thanks for being here today. If you are curious more about business valuations, click my link, book a call with me, and I will chat with you more. Thank you. Bye.